welcome to BloombergQuint. Early morning news of a mega merger, actually decades in the making, broke through, and that's HDFC Bank and HDFC Limited intending to merge. It's still a long process before they actually do so. Joining us to talk about this story, Amit Tandon, Ashvin, Parekh, both veterans of the banking sector, and my colleague Vishwanath Nair. Thank you all so much for taking the time to speak to us. I'm actually going to go to Vishwanath first because Vishwanath, you were there with the management. You interacted with both the HDFC Bank CEO, the HDFC management. And I think the question all of us here in this panel will be asking is why now? Why is the timing right now? And I think you may have some insights on what you gathered from them.
Yeah, thanks, Ira. So when we spoke about this to the management, they seem to suggest that think the ecosystem or the current environment within the banking and the NBFC sector has changed enough for them to seriously consider the merger as an option. So Mr. Jagdishan at HDFC Bank was saying that 6 years ago we had looked at this, and at that time the interest rates were not right. There was still quite a lot of arbitrage between the way banks are regulated and NBFCs are regulated. All of that has changed in 2022. Firstly, there is an LCR requirement, a liquidity coverage ratio requirement for NBFCs, which was not there earlier, and therefore that is closer to where banks are, at least getting closer, because it's coming in a phased manner. There's also the NPA recognition and classification guidelines for NBFCs, which has changed significantly. The RBI has harmonized those guidelines with banks, and especially because of HDFC Limited, it's a very large housing finance company. According to the RBI scale-based regulation mechanism, which it is implementing, it will automatically qualify for the upper layer. And the upper layer, as we know, if we study the guideline, it's the closest to where banks are in terms of regulation. So all of this has come in now, and therefore this is probably the best time to consider such a merger, and that's why both the boards of these companies have decided to go ahead.
Yes, so regulation has changed, the interest rate regime has changed, and according to us, the third factor that has changed is personalities. Let me go across to our guest, Mr. Parekh. What do you think sort of brought factors together for this to be finally announced? We all know this has been talked about for a long, long time.
Yeah, so see, I'll tell you 2-3 things. If you look at the way the NBFCs have been performing in the last perhaps 4-5 years now, you see, I mean, they went through a process of growth till about 2017-18, and then 18 was perhaps one of the best years, for NBFCs. Suddenly, I mean, it did bring to everybody's attention that there was a large dependence on public funds, and then suddenly this whole question of how much of systemic risk NBFCs were posing to the system really came up. And in fact, consistently we saw RBI coming out and saying that it's only the large NBFCs who account for almost about 75% of that systemic risk. And HDFC, of course, was one of the major institution within that. So, I mean, from that time onwards, gradually you will see that the so-called regulatory arbitrage and the very, dispensations that HDFC would have sought from the regulator, to really consider a merger, those were actually getting washed away gradually. I mean, from a 26% kind of a SLR CRR level, we have now come down to almost about 22%. I mean, 400 basis points is a huge reduction, in fact, in the SLR requirement. Plus, there is a fact that, during this COVID period, the banks have not lent so much. The credit expansion has not been there, but the deposit growth has been there. So, I mean, that amount of fund which is extra sitting in SLR today of the bank can act as a cushion, for HDFC as well. So they would have certainly considered those. So therefore, the number of dispensations, with an exception perhaps of PSL, priority sector lending is one dispensation which, they will be happy with, getting the regulatory alternative, which is getting the PSL certificates, but that will come with a cost. But with that exception, there's no other major dispensation that they could have perhaps thought of asking the regulator, Okay. So in that backdrop, this is a very good time. Plus real estate price, improvements are there. So, I mean, all these factors must have led them to make a decision now itself.
Amit, your take on the timing. Mr. Parekh didn't answer my question, my second half of my question, so I'll put it to you more directly. As Mr. Deepak Parekh himself said, he said we were looking for a home. He's close to retirement. Mr. K.K. Mistry is getting on in age. Aditya Puri stepped down. Rumor had it that he was not very much in favor of this merger. We have a new, younger CEO. So, from a personality management standpoint, also perhaps this was a good time.
Oh, absolutely. Ira, I kind of quite agree with what Vishwanath and Ashwin have said, that it's a set of circumstances and events and the environment which has kind of done it. But also, if you kind of look a little bit ahead, there is going to be significant change as far as HDFC Limited itself is concerned. And there's a new team which is all rearing to go at HDFC Bank. So if you kind of think about it, and having said so, the teams at both places have comfort with each other, they work with each other. So Mr. Parekh would have thought about the fact that, look, as he said, they've been looking for a home for some time. There's no one better than HDFC Bank to look at it. And, of course, all the businesses have their pulls and pressures. Given HDFC's size, it had become very large for the other banks to continue to lend to it. So in this one fell swoop, the issue of funding for them is being sorted out. For the bank, they get access to HDFC limited customers. So it's kind of works for both the entities at this stage.
Vishwanath?
Yeah. So the first question that I had with respect to this merger was also the fact that there is going to be a significant employee base that is going to be merged within HDFC Bank as well. The management explains that this is a monoline business. It's very easy to merge this. The systems are pretty much the same. But there's also the fact that this distribution strategy is still, at least HDFC Limited, is still focused on housing finance. While as a bank, you need to expand a lot more. Do you think that that may become a bit of a problem, that you'll have to boost the distribution side of the story? Mr. Parekh, Mr. Tandon, whoever.
Look, at the end of, sorry, Ashwin, why don't you?
No, go ahead, Amit.
I was just saying that, look, at 3,000 people, it's not really a large problem which you're looking at and saying that, look, it's two large entities of equal size in terms of manpower. And if you kind of then, cut through it, there'll be some people who would be on the lending side, there would be some people in the admin, there would be people in treasury, etc., etc. But in the aggregate, it's just kind of can be very easily stapled on to what is happening at the HDFC Bank level. The other way of thinking about it is, and I don't have the numbers for the bank, but if you kind of look at what's happening in the financial services, there is a great deal of churn which is going on. So at one level, you've got 3,000 people who kind of have the same culture and the same ethos, who are kind of moving from one entity to the other. So some of that friction which you see in some of the other such mergers is not going to be there in this case. So I'm not really sure it's something which I would worry about at this stage. Ashwin might have.
No, sure. I mean, my perspective sort of, would be a little different, and I'll explain. See, what happens is, if you will see the technology in banking in the last 2 years, it's been far more demanding. I mean, both managing the employees. I mean, the work from home environment, let's say in the banking, is a very, very difficult one. And I mean, most of the banks have really stood up to the test. But in order to do so, the amount of technology adaptation that has happened in the last 2 years, I mean, it's been never ever before could have been, I mean, this kind of an absorption or adoption would have taken place. Now you got another challenge, which means you have to now reskill a set of people, human resource, which is doing brilliant work at HDFC, to really migrate into the bank and to become a part of the bank. So, I mean, two dimensions. One is, on one side, the technology is moving very fast. Disruptions after disruptions, in small way, are taking place in the fintech areas on one side. And B, you got, let's say, some kind of a reskilling and reorientation responsibility, to make sure that everybody runs at the same speed. So, I mean, I would certainly say that for the next 2 quarters, we might see a certain order of inward-looking kind of an exercise or an effort on the part of these two organizations. I think the sooner the reskilling happens, the sooner the reorientation happens, they'll be able to run faster in the marketplace. Agility, therefore, adaptation to technology challenges is something which they will have to certainly consider, to my mind.
Actually, just stretching that point in terms of what this means for the bank, Mr. Parekh, I'll stay with you. So, 3 things. One, they will have to hold more liquidity. you will see the mortgage book come into their portfolio, which will depress margins. And as you already spoke about, management bandwidth also will significantly go towards this. There will be PSL requirements. Again, there may be margin impact of trying to meet those. For the bank, till this merger closes, will some of these issues remain an overhang?
They will remain and they will have to be addressed. I mean, some or the other. So the issue of liquidity that you mentioned, for example, I mean, I'm also seeing a certain amount of challenge in the asset liability management, because in the real estate you have long sort of assets, and then what may happen is your deposits will transit, eventually into short-term kind of deposits. So therefore, to that extent, they will have to not just manage the real estate portfolio that they will bring into the merged entity, but I mean, gradually they will have to really rationalize it. I mean, in the context of the merged balance sheet, basically. I mean, in keeping with the new liability profile. I mean, that's one part. Second is, I mean, this is one big challenge that I think, I mean, and I'm sure the boards of both the entities would have really examined this. But, if you study the liability profile of HDFC, a large number of deposits come from sort of, I mean, pensioners particularly, or those who expect secured sort of, savings, I mean, secured investments, but with a certain order of income, I mean, a return, I mean, a certain amount of income on their investments. Now, that gradually will be withdrawn. Then you also have a very large number of deposits, which HDFC, I mean, enjoyed. I mean, the institutional, like, for example, you have the charity trusts, large trust organizations who are really placing their deposits. I mean, the regulations required them to place their deposits with deposit taking NBFCs, and they also had to manage their income, I mean, charity income from those investments. So from that perspective, managing that huge liability amount, transiting it into the bank at a lower cost, and then changing the profile of the very deposit holders, basically. Because so far you were looking at, let's say, a certain age group of deposit holders. From there, you're migrating to sort of, all the deposit holders who are prepared to put, I mean, deposits at a lower rate, for instance. So, I mean, when we talk about cost reduction and when we talk about, but I mean, in order to get there, there is a huge amount of sort of effort that really is required to be put in, sort of, So those are some of the challenges that I'm sure, I mean, that they will have to face, I'm sure.
Amit, a question to you, and then I'll hand it over to Vishy as well. So, if one looks at the financial sector landscape right now, SBI, top of the order, HDFC Bank and, ICICI Bank, the other organizations had a full suite in any case, all under the bank. In some ways, this sort of then brings HDFC Bank at par, with that structure where they are doing a full suite across banking products, across financial sector products as well. So no quibble with that as a reason to get this going.
Look, absolutely. Except what happens is that the scale and size at which HDFC now bank starts to operate is going to be significantly, if you leave aside State Bank of India, it's going to be significantly larger, and therefore other banks have to kind of figure out how is it that they're going to compete with someone who's going to be twice the size. If you kind of just think about it, if you just aggregate the profit numbers for the two banks, they're looking at about 50,000 crores, which is going to be flowing in each year. It effectively means that, in the foreseeable future and for a long, long time to come, if they kind of continue to operate this way, they're not going to go to the market to raise capital again, unlike some of those who have smaller balance sheets and smaller P&Ls. So I think it's kind of at one level changed the competitive landscape for the market to a very large extent. And then just to, I wholeheartedly agree with what Ashvin has said. And, I've also been thinking a little bit about the pensioners, et cetera, et cetera. The only saving grace from their perspective is that they're now in an environment where the interest rates are going up. So maybe they don't get that incremental 100, 150 basis points, which they would have got with HDFC, but at least there's a good chance that they remain at the current levels. I know it's not good enough, but what they lose on the roundabout, they will gain on the swing at this stage. But let's wait. But but just reverting to that question, I think while we do argue that in terms of structure, etc., they're the same, I think it is transformative for the financial sector, and others will have to run that much harder just to keep pace with how HDFC bank is going to be operating.
Ira, can I come in here?
Yes, please, please.
No, sure. See, and I'll tell you what, I mean, this question, I mean, Amit has actually given the perspective, but the question is very interesting. See, if you look at the effort that, let's say, ICICI leadership is putting in, or SBI leadership is putting in, they are ensuring that the customers belong to the conglomerate. And therefore, there's a huge amount of cross-sell. I mean, you're seeing it at SBI, using the new leadership at SBI is now putting a lot of emphasis on cross-sell, basically. So they are making a bouquet of all financial products available to their customers. I mean, they were huge numbers. That's true with even ICICI. If you look at the effort that the leadership has put in the last 3 years, it has actually been to make sure that the conglomerate functions, each and every aspect of it. I mean, whether it's life insurance, general insurance, asset management, all those pieces, they must come around together to make sure that the customers stay into the group kind of, and they don't walk out. I mean, even for their other requirements, they do not go to the other groups at all. I mean, that's the effort of all these large sort of, 3 or 4 conglomerates. I suppose in that direction, this change makes a huge impact. I mean, I would certainly say the ability on the part of it, they've consistently performed. I mean, the amount of, let's say, banking and the investor return in the banking or in asset management or in life or in general, now everything coming together, and then under one fold, under one holdco, as I would call it, is certainly a big, huge change in the story, quite clearly.
Yeah. I had a question, Ms. Parekh. So I'm glad you mentioned the holdco thing, but then the idea being that, firstly, the bank itself has very clearly stated openly that there is no proposal for a non-operative holding structure to be put in place. But if the regulator requires us to do that, we'll definitely do it. I'm just trying to understand the benefits of having such a structure and not having such a structure. How would it work for an entity of the size of HDFC Bank now with the merged entity?
No, so I mean, let me put it, whether it's holdco or whether everything is held at the bank structure level, that's a matter of detail to my mind. See, basically what may happen is, therefore, that let's say if it, and then you have listed entities under each of those boxes. So let's say what may happen, therefore, is that, let's say if you are now going to digitalize all your services, and then put out applications and say, look, hey, customer, I'm going to hold you. I'm going to give you something on your device. I'm going to hold you with your banking requirements. I'm going to hold you with your life, pension, with your general insurance requirements, your asset management, mutual fund. I mean, whatever you may talk about. Let's say, I mean, I've got an answer for you, kind of, let's say. Now, that is more than the corporate structure. It is a matter of, let's say, a certain order of cultural change within the organization.
Okay.
I mean, the leaderships are both the leaderships. I mean, I must say, SBI and ICICI particularly, they really brought in that change in the last 3 years, sort of, So even when the subsidiaries function independently, whether it's SBI or ICICI Group, but let's say whether they function separately, they are listed entities, but yet the amount of work and effort that they put in together, through the digital platforms, is simply brought them where they are in the last 3 years, sort of,
Okay.
Amit, actually, similar question to you. Does it matter whether, say, the NBFC is merged into the bank or not? Does it matter whether they hold these businesses through a holdco or they merge them into the bank? It's not like it doesn't matter. The regulator does have views on this because of the risk fallout on the bank if you hold large insurance businesses, etc. under you.
Sure. Look, the regulator will have the last word. But, if you kind of think about it, when this started about 12, 15 years ago, at that time, all the insurance companies were sucking in capital. And therefore, the view was that, look, if the bank is, may not be sufficiently profitable to kind of bring in, 500,000 crores as capital. And periodically, it wasn't clear when these businesses will start to stabilize. And then if you look at the way they were accounting for it, it was also profits were a little bit back-ended. And therefore, they were kind of, a requirement of capital was very large. I'm talking about the insurance business. That's not so for the asset management business, etc., etc. And therefore, it was quite understandable. But now, if you look at it, they're all generating cash. So the dynamics have changed. I'm not saying that the risk in the businesses is the same. The risks are different. But the environment and the timing has also changed, where the bank is not actually going to be asked to support the insurance business by injecting capital, whether it's the life or the general business. The asset management business also, they do periodically there are issues which kind of happen in the capital market. But if you look at the ask from the holdco, which happens, it's relatively small. So from that perspective, I would expect that RBI, again, while they have the last say, can be a little bit more flexible when they think about it.
Okay. Mr. Tandon, I had a question for you actually with respect to the swap ratio that has been announced by the bank as well as HDFC Limited. The perception seems to be that this is skewed in favor of HDFC Limited rather than HDFC Bank. I mean, what would you say? Do you feel that?
Look, at the end of the day, they based it on the closing price last Friday. They could have done 3 months, 6 months, etc. I think, if it's 0.1%, 0.2% here and there, it really doesn't matter. So there is a basis for doing so. The fact is that, the market is supposed to have a lot of the information. They did not get this, and that is all credit to management, which is why they're well within their rights to kind of look at a price on a particular date. And of course, you do have issues like as there are certain synergies, pluses and minuses, which each of them went, which the management is in a best position to do so. So the question to ask is, if they said, look, it's not this, it's a different ratio, you would have more people up in arms at this stage. They've kind of taken that judgment away and said, look, the market knows best, and the market's decided. And all credit to management that there was no, while this was a transaction which was in the works for the last 10 years, it kind of pretty much took everyone by surprise this morning.
Absolutely.
Mr. Parekh, actually would love to hear your thoughts if you have any on the valuations as well. And I know they would have followed formulas, etc., but still.
No, I mean, not really. See, my take is a simple one. You see, I'll tell you, I mean, there are two aspects over here. One is what are you giving to the investors now, and what are you going to give them maybe 3 years later and 5 years? The banking is a long haul business, quite honestly. I mean, if you end up giving them much more, let's say in the span of next 3 to 4 years or 5 years, and start sort of generating a certain kind of financial result, which sort of, really makes the investors very happy, then you address that problem. There's a very short-term sort of, kind of an issue. See, fortunately, what has happened is SEBI is also sort of, come out with very clear regulations, I mean, particularly for listed entities. So to that extent, I mean, I would say it's a matter of time. It could be either which way. People can debate it either which way. I mean, I've never looked at such mergers, I mean, and the swap ratios, from the point of view of like tomorrow and the after's rate or whatever. I mean, say, let's look at sort of a longer perspective. And in that context, I thought both the sets of investors will benefit from out of this merger quite clearly. Sort of,
Okay, I have one last set of questions to both of you. Amit, what does the financial sector landscape now look like? You have SBI, the public sector behemoth. You have HDFC Bank, now the private sector behemoth. It already was, but now even larger. In many ways, even the number 2 will now be a distant number 2 and will probably take much longer to catch up, if at all.
Look, it has a couple of implications. One is for, some of the other larger NBFCs. So far, a lot of them have said that, look, HDFC can remain on housing, the limited, HDFC Limited can remain unlisted, so can we. So they will kind of need to rethink their strategy. The second is, as you say, that the gap between the top 2 players, SBI and HDFC, and the others is now significantly widened rather than narrowed. And therefore, the others will have to look around and see, are there any opportunities which they have in the local market, which brings me to, a very obvious fact that there aren't very many opportunities. And that in part comes from the fact that we have very few banks in India. And therefore, something which I've been saying for a while, that RBI needs to let loose the strings and allow more banks to open up in India, so that, maybe there are a handful of large banks, but if you have a couple of smaller banks, then, who knows, 30, 35 years from now, you will have a completely different landscape. I kind of go back and think about it. I was thinking about it when the deal was announced, when Mr. Parekh moved into HDFC. They must be struggling to find people who would want to take a housing loan. And now that he's kind of ready to step down, he's kind of created an entity which has got 50,000 crores of profits, and along the way created some great institutions. So it's an incredible journey, but we have to remember it's kind of taken 40 years in the making. So if we seed more banks today, seed more NBFCs today, seed more fintech businesses today, they're the ones who are going to drive what happens in 10, 15, 20, 25 years from now.
Oh, that's an excellent note. And actually, I'll pick up from that question and get your thoughts as well, Mr. Parekh. If one looks at the journey of HDFC plus HDFC Bank, very sort of closely intertwined with the way the Indian economy has moved, right? And in that sense, will probably continue to do so as a consolidated entity in the future too.
True. See, I'll tell you, I mean, see, basically, Amit has put it properly. I thought banking is actually available to all to everybody who comes out with a certain amount of orientation, basically. I mean, whether you are a small bank or cooperative bank or you are a large bank, the only advantage with large banks is that you are, I mean, far more sort of able to meet with the economic cycles, basically. So last 3 years, you would have seen, you know, that, I mean, if you look at the larger financial institutions, they've actually been able to perform better compared to their medium-sized and smaller-sized counterparts. So to that extent, I mean, I would certainly say. But at the same time, let's not forget that the future of banking itself sort of, you know, will change. 2 or 3 factors will really play a significant role. One is the agility. Second is getting more and more closer to the customers, sort of, you know, because look at the customer expectations. I mean, before COVID and after COVID, the expectations are totally different. Who wants to go to a branch any longer, basically, sort of, you know? So everything is now becoming more and more digital. So in that context, I mean, we realized, we saw, I mean, look at the amount of sort of payment space, which is now getting occupied by different fintechs and, you know, coming in, I mean, from different angles. You now have a lot of aggregators who are assisting insurance companies, asset management companies, you know, to, I mean, to play their part. How well a bank works with the economic system,
yeah,
you know, and makes every small bit of that work for itself and for its customers is where the agility and the new ability comes in, basically. So their size can be both, Ira. It can be a huge advantage, but it could be a drag as well. I mean, I must say, sort of, you know, so because an ability for a larger organization to really change when some disruption in some space is happening, you know, is also, I mean, has its own sort of facets and challenges. So it's interesting. But banking from today onwards, certainly the landscape has changed to my mind.
Absolutely. As Mr. Jagdishan told Vishwanath, I think the elephant can dance. So we will wait to see whether it dances to his tunes. Thank you both so much. This was a lovely conversation, mix of history, perspective. Thanks so much for joining us here from Bloomberg.
Thank you.
Thank you.
Bye-bye.